Hey, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for November 22nd, 2021. I want to just start with a couple right off the bat from yesterday's trade frames. So this one was U.S. Steel this morning. We had talked about the metals being in a critical state, ready to go hard in either direction. Today, there was a gap up in U.S. Steel. It moved a minimum manageable risk box from the low of the day after the gap up, which is about 25 cents. So just went ahead and bought it at like 24.85 with a 25-cent risk. It moved directly up. When it reached this peak and started to roll over, I moved my stop to no lose plus dinner for two, plus a little bit more if I'm honest. But essentially a COTA 2 second position here. It momentarily breached and then came back and went, and I scratched the second position, but made bank on the first position. It immediately reversed in another COTA 2 because you have like a low and a higher low. So I was treating that as a COTA 2. So I just went and put the two positions back on. Then it breached yesterday's high, and I added a third position while adjusting the stop up. It hit 26 and started rolling over. And so since I had three positions on, I went ahead and made a pretty tight stop in here, and it exited shortly thereafter. So this is that's about 5R on the first position, probably 2R on the second position, and maybe 1 on the third position. So somewhere around 8 for that one. This next one was this is sort of a typical sideways quiet channel. And what I want to show you is how to interpret a setup with using the regression lines and then the VWAP, because that was yesterday's discussion. So one of the first thing that I noticed was, I mean, obviously the sideways quiet channel in here, and everything is grinding, right? And you have the RL90 is perfectly flat and inside the Z3. The RL10 and the 30 are in there. You've had, 20 or 30 bars of just pure sideways, and the VWAP is flat as far as the eye can see, right? But what I did notice, the other thing was this blue line here is the projection off the daily chart of the 3-period Hull moving average, which sort of tracks the short-term momentum of the last couple 3 days. It's exponentially weighted to the front side. So it does a pretty good job of tracking the status quo momentum, so that if nothing changes, you wouldn't be surprised if price just followed along that aqua line right there, right? And so what that means is that the price, after it gapped up, that stayed north of this and is holding above that, that's actually a very good sign. That's the sign of a upward trending market that is holding above, the projection. And then the last thing I noticed was the uptick here in the RL 270. So it had been coming down, and then because of the gap up, had started to slow its roll. And now in the last 3 or 4 bars, this thing actually is starting to slope back up. That sort of represents a potential turning point in the longer term life cycle of this chart. So I went ahead and projected the RL 270 to the upside, with the idea being that if the strength that is indicated in the shorter term move, the gap up and holding up around vicinity, the VWAP, if that holds, then price should stay north of this this Hull moving average, and also north of the RL 270. So that would be a good thing. And then I'm noticing how tightly compressed the Z3 pinch is here. And so that's a good thing. And then I noticed that the price is breaking through the VWAP, and it's just about ready to VWAP flip here, another bar or two, and that thing should VWAP flip. So that to me is enough information to start thinking about this kind of an entry. Somewhere around in here. And I'll use the Z3 line as a stop and reverse, because if this thing fails immediately, then it's falling out of that Z3 pinch channel. And then if it falls down below the RL270, I would plan on adding a second position down here. Above the Z3 and above the VWAP, since if I'm getting long below the VWAP, that's actually going to be a good thing, and I'm buying on the correct side of fair value. So I'm happy with that. And that means I would probably be looking at, if I go up 2R with momentum, then somewhere around that price level is where I've got to be thinking about adding a second position, unless I have a better reason. So that's how I frame this particular trade out. Okay. Let me know if that's unclear in the chat. So then when this thing starts unfolding, okay, it breaks through the VWAP, and now we're holding. Now on this move right to here, this is about where I have to get, if I'm not already at no lose plus dinner for two, then I probably have to get there, right? Because here's my stop. Even if I'm very, I'm going to say meticulous about this thing, I would probably be something like that if I was using the VWAP or if I was using the Bollinger Band mean. But I really look at, if I'm looking at the Wu-Wei exit, let me zoom in on that so you can see a little more carefully. So either one of those exits is legit. Exit strategies is legit. The Wu-Wei exit waits for 3 PSAR dots above the entry before it moves. So the Wu-Wei exit would keep the original risk down here by the Z3. And it would look like 1, 2, 3. And so the Wu-Wei exit would then say, give me, at that moment on the fourth, where the fourth dot is, let me just go ahead and move my stop to that PSAR dot and then leave it there until the Bollinger Band mean picks it up. All right. So it would look like this. And then now you have locked in the Wu-Wei exit, in this case, locks in that much gain. And then you start getting whatever that, plus whatever that red line is going to be. In this case, the Wu-Wei exit protects you against that little penetration of the PSAR, because it's still early days in this trade, right? Now, on this portion of the move, when I see a break like that is now pushing the boundary of the Z3, I mean, this was comfortable just kind of riding between Z1 and Z2. That's what it does. And now this push up to the Z3 that closed very well, this might very well cause me to go ahead and just lock in that much and say until the Bollinger Band mean catches up, I'm just going to lock in that much gain. Now what I've done is lock in this part of the move. Oop, That's right. That should be a green box. So I would be looking to lock in that much gain. All right. And so now this is really a science project. I'm somewhere about 1R in hand at this point with a very carefully controlled risk. So if I was going to just quickly measure that, if that's the risk box, we're probably almost to the penny. The power of calibrated eyeballs. So like right about there, I've locked in 1R. And that feels pretty good. And I'll just keep that stop in and we'll just see if this works, it's going to work. And now, excuse me, I'm looking to the to where I place my 2R estimate. That's about where I'm thinking about the second position. If I can get through that with momentum, then I'm really happy. Okay. In this case, I'm happy to take this exit, and that's still about a 1, 2, 3 exit, and so now my trade looks like this, and get paid for an R. Nothing wrong with that. Now what I should be considering is, do I want to get short? There's a reason to get short right in here, north of the VWAP, with the idea being that if this is going to fail and come down and test the RL270, then if I get an entry here with a risk box, something like to the PSAR or the top of the RL10, in that case, it's really the same thing. I could think about that as a short. I might also say, the S&P has been pretty strong and I don't really want to get short that. Maybe what I want to do is just monitor this and be ready for it to find support at the VWAP. That would be the least surprising thing, would be for it to find support at the VWAP and then, take off something like this. So there's a legitimate critical state decision you got to make right around this area. I did not take the short. My thought was we are already above the all-time high and moving north, and so why not? I'm stalking a re-entry here like a COTA 2. But if this thing gets below the VWAP, the orange line, or certainly below the Z3 line, I can be thinking now, like if it breaks below this Z3 line, then I can be thinking about the short, and I would like to get short inside this yellow region. And if I don't, then I have to get short when it breaks the RL270. Okay. Because then that will have violated the long-term upward trend, and it would have violated, if we look back, it would have broken out of any of these Z3 lines. So what I essentially did was I was going to wait to see it cross the purple line and see what happens. But I'm really ready to trade it north, like on a 1, 2, 3 entry from the yellow dot, or get short if it falls through this other yellow zone. Kind of clean these things out here. Here we go. Okay, so that's what that trade looks like. So now it's failing. And so now what I got to do is take my short according to my plan here as it violates the RL270. And now I can use that same original risk box that I did from the very first trade and get short. Now, a legitimate entry short would have been here, because now it has violated this. There's a Z3 pinch that had just happened right here. But I was busy watching CLF and some other things, so I missed this one. It was a span of control issue. But this would have been a legitimate short position where it crosses the Z3. Now, if I had been more savvy, I would have realized that the RL270 projection that I had drawn was not really valid, because the RL270 had started to get better. And so if I had adjusted my projection, that RL270 would have looked like this. And now suddenly this entry here at the Z3P is looking a lot better. And if I was waiting for the official crossing of the Z3, I might have gotten short there. But because I didn't do that, I had set an alert to myself to get short here. That's where I end up getting short. So both of those were considerations. If you're an index trader, because you're looking at S&P, maybe that's always on your screen all the time. This is just one that I missed today. Okay. So anyway, I'm short here with a stop at the and I just kept this the yellow zone stop here. Now, by this time, you get that much of a gain. Oops. And to me, you just have to respect that. And I'll just move this down here and get no lose plus dinner for 2. So now I'm going to make money on this trade no matter what. So I've locked in that gain. And now it's a science project. And then you get a second position here when it crashes below the hull, because why not? Because now you're 2R in hand with momentum, and it's getting closer towards the end of the day. And so I just, after that second position, just drop this down to the edge of Z3. And just say, look, I'm going to lock that piece in. Now we're getting close to the end of the day, so I have to be out of this position. Just take that. And that's a pretty good afternoon trade. You notice that this is one that collapsed well below the VWAP. The VWAP offered no support whatsoever. It had started up slightly higher than the VWAP. Then the collapse occurs. A normal collapse would take it around to about where we got short. And then there was just a late afternoon mad rush to the downside. And then, so we got an opportunity trade in there. Then naturally get out way too soon. Not way too soon, but you got out when I'm supposed to 5 minutes before the close. So we can think of that one as the VWAP collapse and the Z3P collapse. All good. Traded in a standard way. Okay. So that's worth studying. Those two were both set up by the weekend trade frames, one of it which was the S&P itself, where we were looking at it being at a critical state because it was so the price had gotten so high into nosebleed, and the risk Z had been warning us about potential adverse moves. And then the second one was, actually the first one was the U.S. steel that we'd set up as part of the metals. Okay, so that's that. Let's look at today's price action. So that trade that we just looked at was this one. It's still all kind of yellow zone on the daily because it held above the daily PSAR. So that daily PSAR is holding, but just barely, and the bottom of the dragon. But today pushed to a new high and then could not hold. And now the RL30 has rolled over. The hull has rolled over because of the weak close. And now this price level tomorrow at the bottom of the river at 466, all of that is in play. And then if that fails, the next least surprising move would be back to the VWAP. I'm sorry, to the Bollinger Band mean at 459. The 10-day low is probably not even a blip on the radar screen, because if we get the same size move tomorrow that we got today, it'll blow right through that. That's if we take that same move and just project that down. Yeah, it'll blow right through the 10-day low tomorrow and get directly to the Bollinger Band mean. So that's what it looks like for tomorrow. But otherwise, everything is good until proven otherwise. This is just noise retracement. But as always, I'm prepared for a couple days of weakness here in the bull market as people back and fill and they, play their leverage games, whatever. But I am noticing the RL30 rolling over. Notice how some of the steam these last 10 days have been pretty much flat. It closed here and closed there. Those last 10 days have been about as flat as you want, which is different than what the previous 10 days look like, which was up and now flat. So that is enough to cause the slope of the RL30 to start rolling over and for us to notice that. Okay. So yellow light caution. All right, let's look at the sectors. All right, so everything was pretty tightly clustered in performance today. The S&P was down 0.28. The best performer was the Dow. It was up a fraction at 0.08. The Russell and the emerging markets were down 0.4 and 0.8 respectively. And then the two bigger losers today, the Qs, minus 1.16. And then oddly, the Treasury's off 1.17. You would have thought that if there was some worries that the defensive play of the sector might have had some buying pressure, but that was not the case. But still, it's at 146, and it wouldn't take much for that to go up strong tomorrow. So that will bear watching, because I think we're in a market critical state right now. Let's take a look at the upsides. The sectors are outlined in green. Materials, 0.16, then a cluster of lumber, agriculture, the other lumber, blended commodities, commercial real estate, and consumer staples between 0.4 and 0.8. Then we had oil, 1.25, finance and oil exploration, 1.4 and 1.6. Then VXX 1.77, and that's a hint that tomorrow could have some more weakness. People are paying a premium to buy insurance. Then energy and lithium, both up 1.7 and 1.8 respectively. And then the outperforming sectors, or targets, I should say, all the metals. U.S. Steel, 4.3, Cliff, 3%, Alcoa, 1.9, Tesla, 1.7. It's back up to 1160. Devon Energy, John Deere, and TX, the other steel company. So all the steels did very well today. And then Apple in the tech space was a little better. All right. So let's take a look at what underperformed the S&P. So the S&P was down 0.28. You had the clean energy, Mexico, and the FANGs down 1.2 and 1.6. S&P Biotech 2.17, Wheaton Precious 2.5, Bitcoin Trust, or I'm sorry, Bitcoin futures 3.6. The blended large cap crypto 4%, blockchain, Arc Innovation, Bitcoin Trust 4.2, marijuana, moonshots, Ethereum 4.8, Arc Genomics 5%, and then the individual targets that lost the most: Squarespace 6%, Coinbase 5%, Robinhood 4%, PayPal 2.1%. So that all of your financial disruptors getting smoked there. Okay. All right, let's take a look at the if I just zoom in on the last 10 days, then this just feels to me kind of like a critical state. It's come all the way back to the 50-yard line from the high of the day, to the high of the 10-day period to the low of the 10-day period, which was all the way back here, and the high of the day there. So it's a crapshoot going forward. You got the PSAR voting up, you have the Hull voting down. So sideways would be the least surprising. You have the dragon is perfectly flat right here between 466 and 468. So you got about a 0.5% channel to contend with in here before you get anything like a directional move. So that makes this a perfect critical state. And I'm thinking, I will be a tactical trader inside the yellow zone. But then I'll start picking up a directional bias once more if it breaks out north. I would call that probably green space here. And then I'd pick up a short side bias down in here. And then I would pick up a strong short bias if it violated the 10-day low en route to the Bollinger Band main. So that's kind of my critical state framing for tomorrow. Let me know in the chat if that was helpful. All right, next up, let's take a look at the 30R. The boys pulled out of the markets today. Well done. Hey, Luke, remind me what my Thanksgiving challenge was. What did I do last year? If that is if it's fasting, then yes, because the girls are all driving up to Michigan. Steven and I are staying here with the dogs. So we're probably just going to fast. All right. So here's 9R from Luke in Cliff. It's our Cliff trader here. So he notices the gap up. This was the close yesterday. So he notices the gap up. He gets a 1, 2, 3 entry. So he enters here with a risk box right here to the low of the day. He considered adding a second position here if I know him. It rolled over. He got a reasonable exit for +1. He notices a low. It could not make a new high. And so he went on the PSAR flip. He's going for the short trade. He's trying to front run the crossing of the VWAP and the RL270 like you just saw. Doesn't work. So he just scratches at -0.6, I should say. The stop and reverse was maybe a little slow here on waiting for the PSAR flip. He gets a run up past C3, gets a reasonable exit, -0.2. It rolls over again. Now what I want you to notice is that he has detected, a high in the RL10, a lower high in the RL10, the PSAR flip, crosses the Bollinger Band mean. So he gets short with a stop at the PSAR. Gets a second position in, and then just in time to erase that. So maybe we got to take that here. Mox nicks. Now he's got a low, a higher low. He treats as a kata 2 to the PSAR dot. I think he comes all the way down to this one, though. Crushes it. Now he's a little more conservative, so he doesn't take the second kata 2 because he got burned on this one. So he gets 1.8, gets a scratch. And now out of the all-important Z3P, there's the PSAR flip, the breakdown out of the river. He gets a collapsing dragon here and crushes it for 7. Well, I know what it feels like there, that extra moment of reset. There's nothing wrong with that. 9R. We'll take that, won't we? Yeah, we will. Ken H in Alcoa. Bringing home 6.6. So that's going to be a good day at work. On the daily, he notices this. He's got that rising kind of VWAP. Actually, this is the hourly, sorry. So he's sneaking up on me here using the hourly and the 2-minute, getting all tactical. I was able to figure that out when I saw the dates and saying, that's unusual to see the VWAP rising because normally on daily charts, you don't see the VWAP. So the VWAP is rising and there's a PSAR flip. So he just buys it with a PSAR. It runs up to Z2 and starts to come back. So he says, let me just cash 0.7. Nothing wrong with that. That's on his swing, the swing portion of it. But while this thing is working, he now comes over to the turbo side on the 2-minute and he sees the big sell-off at noon, finds support after a Z3 excursion, 1, 2, 3, buys at the spine of the dragon with the low of the day or the PSAR as his risk box. Gets a second position in, gets a third position in when it crosses out of the river and rolls back over. So the third position loses 0.8. The second position gains 1. The first position gains 2.5. So that's about a 2.4, 2.7. So 2.7 on that series. Then he gets okay, so here's a low. There's the strong move, the sell-off, holds support, PSAR flip, buys it with the risk box in the usual way. Second position, third position quickly, because it's now past the Z3, holds a higher low, runs all the way up, and now he makes sure that third position doesn't lose money. It was probably a scratch, all things considered. So he pulls in another 3.5, gets another kata 2, because now you have a low, a higher low, a higher low, RLXD gets paid for 1. Now this one, to my astonishment, he's not short on the collapsing dragon. He got mesmerized by the 6 or 7R he had in hand. So he doesn't get short in the collapsing dragon. He doesn't get short on the Z3 pinch. He tries the long side, which is reasonable. That's a 1, 2, 3 entry, finding support at the VWAP. I support that trade. But here's the one, when that breaks, can't get them all. But boy, is that a nice one. Holy mackerel. That has, if you just use the standard risk box, that's going to give you 1, 2, 3, 4, 5, and some change. He's been trading so well, I feel like I want to rub it in a little bit. Here's that same trade that I showed you earlier with US Steel. And so the The swing trade on the daily had set up this where it had strong support, the first move up, the measured pullback to the Bollinger Band mean, and then framed it, and it broke out. So he gets paid big here. This box is that box. And because of the gap up, he has to buy it here, and he gets paid and brings home a little over 1R. So that's pretty good. And that's on a 30-minute bar too. The one we showed earlier was on 1 minute bars. Cisco. We talked about this one over the weekend because of the big gap, and then the bottoming tail, which had reversed. Now you have a 1, 2, 3. So that's a 1, 2, 3 entry. Another way to look at that is it violated the Z3, reversed, and so he buys it at Z2 with a stop at Z3. So that would be called P7 in the first generation RLCO framework. He was checking to see if I knew that. I know that. So now on the 30-minute chart, what we've got is the big gap yesterday or Friday, the sell-off that found support, held support. So he framed that. This frame is that frame. It breaks out above, and he plays a nice measured move up and down to lock in 1.5, just like downtown. I like that one so much. I like that better than the 9 and 10 Rs, because if you keep executing like that on the 1.5s, every so often you're going to get a 9 or a 10 R accidentally through no fault of your own, because you're paying attention to the details. All right, this is mRNA. Here's again the daily and the 30-minute. Big gap down, reversal. We framed this one, over the weekend. We were looking at a continuation play. We said if it got above here, this could go all the way up to close this gap and get up to 340. And what we had was a low, a higher low, a higher low. He buys it on Friday or Thursday, I should say. Adds a position today. And then when it starts to roll over, it says, you know what? Enough is enough. Cash 4. Nice. Take it while you can, especially with the way this market closed so weakly. Why would you take an overnight risk? Tesla, he's been trading the heck out of this one. The sell-off to 1,000, first position, second position, third position on the swing. Oh, and then moving to stop to 1172. And then the tactical trade on the 30 minutes on Tesla. 1, 2, 3, and cash for 13R on Tesla and no overnight risk. Ladies and gentlemen of the jury, what are your questions on that one? So nicely done. Golly. All right, that's that. Let's get to the daily report. Set this thing up for tomorrow. Enjoy the feeling and done. Get back to the zero state. Get ready to work. So you never really get a chance to enjoy it. But you're not trading for enjoyment anyway, I don't think. Let the enjoyment come from other dimensions. Enjoy the feeling of quiet competence, but use that feeling to prepare you to defend that feeling. So you don't enjoy it so much as you use the energy to prepare. Not much fun in that, but who's trading for fun? Yeah, it's bottom line. Ken H said it exactly right. Business results, and tomorrow's a new day. That's what the zero state is. You shovel coal, clear the deck, take care of your tools, get well rested, enjoy your family, go back to work. You want to have fun? Play the bass guitar. All right, let's take a look at the daily now. Dashboard one. So we're still bullish normal, overbought long term. Now here's a tactical opportunity forming as it gets a little bit weak on the 10-day and the 2-day. The risk Z is still warning us about risk off conditions. Be cautious. That's coming from this little reading. You've got quite a few of the indexes now showing on channeling and overreaction. These are the ones that are starting to be weak. These are the ones that had the largest sell-off. So the Russell, the Euro-Asia blend, and the European 350. Or we were saying that if the U.S. markets were going to have a big gain, then IWM was poised for a long side move. It did not get that today. It broke down today. So we'll be ready for more of that tomorrow. No dojis today. It was a directional day. You have a lot of things on the auto framer because of the relative size of the sell-off today. You got a 5DD and a channeling and an overreaction in American Express. Worth looking at. And Visa also 3.3 to 1. Disney remains interesting at 7 to 1 reward to risk. In the ETFs, a handful of channelings and overreactions, a ton of auto framers to choose from. Lots of goodies in there. Yeah, this is a buyer's market here on the auto framers, so don't take any shortcuts on this. Lots to choose from. Yeah, it's take your pick. Too many good things to list them all. They're all listed in the green, all better than 2 to 1. No squeezes today except for Walgreens. And this was kind of a directional day in the S&P today. It's well down the stack. So it's starting to get direction. It was an expansion of volatility and closed poorly. So we'll see if that was just to shake out the weak hands or if that was an indication. Lots of fall. Only one spring and one summer in the ETFs, and starting to get a significant number of winters. So the strength that we have become accustomed to is really been localized to the S&P and some of the big indexes like tech. But otherwise, there's been a lot of weakness. And the same thing in the Dow. Apple and Home Depot, notable exceptions. Procter and also the Dow Chemical. Walmart, the lone green today. And notice the formerly strong ones, all the greens in the longer term, all were on the receiving end of some profit taking today. That's what those numbers mean to me. And then you'll see the same thing over here. These are primarily your big winners. But today there was profit taking with the notable exception of finance and the defensive play of utilities. So starting to get a little sideways-ish here. The weakness continuing in the slope of the 30. It's now coming back to within one standard deviation of the long-term average. That's a cooling off period. It hasn't fallen much, to be honest. It has just failed to continue to go up. So as long as that's the case, it can cool off without collapsing, then this becomes the case for the next leg up. So we'll watch to see if there's a range expansion tomorrow. All right, so consolidating here in the usual way. Nothing to worry about yet, only something to be prepared for. So, I mean, this could look like this, followed by a collapse below the river, as it did here, as it did here, as it did here. So a move back to the bottom of the river would be a natural and normal thing all the way back to 450. That's why, in my opinion, a stop around 466, which is 4% higher than that, is actually protecting you pretty nicely. All right. All right. So that's everything we got today. Let's go ahead and get this published and posted in the usual way, and we shall be ready for it tomorrow. Take good care, and we shall see you in the chat room.